Happiness is freedom. Freedom is having the choice to spend your time doing things that inspire you. Most people want freedom, but many people don't have a clear objective, a roadmap, or a strategy to achieve it. Everyone deserves to live an inspired and free life. I believe that when we're free and able to focus on our most meaningful work, we simply become better human beings. We can give more, care more, support more, and love more. I'm an investor, a trader, and an entrepreneur, and I get to spend every day doing what I love. At the age of 29 years old, I became financially free, and since then my mission has been to help and inspire other people to achieve the same so that they can be more of who they really want to be. Always Free is about having a free mind, being free to question the status quo, free to take risks, free to say no, free to say yes, free from social idealisms, opinions and beliefs, free to disobey, and free to wake up every day and spend your time to make a difference that inspires you. You can have it all. Living a life designed by you isn't a stroke of luck or a result of circumstance. It's a choice. So if you want to learn how to become free and live an inspired life, join me for the #1 show for financial empowerment and wealth creation as I share my insights, tips, strategies and advice on what allowed me to be always free. Welcome to the show. I'm your host, Jason Graystone. Well, welcome back to another episode of Always Free, the show, which is based off the podcast, which is based off the newsletter, which is based off my brain, and it's good to have you back. Let's see who we've got here so far. Reno, Neil, Pigs in Pajamas, must be Thursday, Jules, as always, Peter Kennedy, Andrew Birch, all the usual suspects. Good to have you all here. Hope you had a good week so far. Hope you've had a good week in the markets. Actually, in the markets, if you're a trader and you're watching this, it's been a very eventful week fundamentally. So there's been lots going on in the news, which has caused a lot of kind of anticipation in a lot of the markets. So there hasn't been too much. Tomorrow is Non-Farm Friday. For those of you who know what that is, NFP, just stay out of it if I were you. It's not a very hostile place or environment for traders who have got a consistent edge. So yeah, been a bit of a quiet one in the markets, but welcome back. This is the #1 show for financial empowerment and wealth creation. And if you're here for the first time, there's lots of other episodes on this. I don't know what episode we're up to now, but there's quite a few there, and you can go and watch all of the rest of them. And you can also go and listen to the podcast as well. There's tons and tons of podcast episodes. I think we're up to 109 now, which came out today. So go and check those out as well. Let me know what you think as well. And if you've got any value from those over the last 2 years or so, go and leave a review on iTunes for us so we know what you're getting from it, so we can continue to do more and more. But I appreciate you being here as always. I'm going to slurp my coffee into the microphone. How you doing? Georgina's in the house, JD's in the house, Stuart's in the house, Peter's in the house. It's good to see you. So look, this week I threw out a question on my Instagram. I got on my phone earlier, went on Instagram stories. If you're not following me, you can find me there on Instagram, right there. That's my Instagram handle. And if you are following me, you would have seen me put out a story where I said, you decide the topic for today. I'll go into whatever you want me to talk about today. Just let me know what you want to talk about. And the one I selected was this one. It came up, says, best questions to ask yourself before making a financial decision. Okay, so best questions you can possibly ask yourself when making a financial decision. Now, instead of there's tons, we could talk for a week on this, and there's different questions you should ask yourself depending on what type of investment you're making. All right, so for instance, if you're investing in stocks, you might want to look at certain metrics in the financial statements, whether it's undervalued. You might look to the price to equity ratio, price to book ratio. You might perform some qualitative or quantitative analysis. You might perform some technical analysis. You might read the story of the company. But way before all of that, and if you don't understand any of that, you shouldn't be making investment decisions anyway in those types of assets. But way before any of that, it's what I find is the biggest stumbling block is people don't really know what an investment is and when it's an investment or a good investment, a long-term passive investment, a solid investment, or a more kind of higher speculative gamble or a speculative play. And like just today, I got asked about some new coin. I'd never even heard of it. It was called Axie or something like that. I haven't even heard of it. And they were like, well, is this a good thing to invest in? And I said, well, if you don't know anything about it, the first investment you should make is in your knowledge of understanding it. And they were like, fair comment, I'll go away and research it. But what I want to talk about is the difference, because there are levels of investment. There's like right down one end, you might have a crypto, okay? So that would be really, really high speculation. And then down the other end, you might have like low cost index funds, really passive, things that don't require much of your time. And then through all of that, there are levels, there's scales. And from very, very pure passive, solid investments right through to the most high speculation you could possibly do. So like, even as far as going to the casino and putting everything on black, putting all your money on black, that's one level of speculation. But then guess what? If you go and take a loan out or borrow money from someone to go and put all money on black, that's an even higher speculation. So there's scales, there's a huge scale, and you want to really start by asking yourself, what is this? Is it a speculation? Is it an investment? Or where does it sit along the scale? So when you're adding these things on and bolting these things onto your entire portfolio, you've got some kind of scoring system or some kind of way of understanding how many good investments you've got or long-term investments you've got, how many speculations you've got, and really what the overall risk is across the whole thing. So that's really what I want to go through with you guys and give you some ideas on how to do that. So before we do that, is there anyone here who invests long term? Is there anyone here who's a trader? Anyone here who's a gambler, even speculator? I was talking just last night about when I was going to go into online poker when I started my speculations. What type of investor are you guys, or what type of investor do you think you are? Let me know in the comments. I've got a bit of a sore throat today, so apologies if I keep clearing my throat. Hi everyone, made it to another show. Lovely roly Batman. Amazing. Bit of trading and a bit of investing. Cool. So look, mixed. Here's the deal. You wanna have a way of identifying what's what. As I say, there's levels between, like things like gold and some other commodities might be in the middle, and then up the kind of up the investment side, you might have large cap, medium cap, small cap, right? And then you might go all the way up to index funds, say. So you go small cap, medium cap, large cap, index funds, or ETFs, then index funds, and then managed index funds, or you might have, to as passive. And on the other side of the scale, which is speculative, you might have property, forex, and as I say, gambling, and then gambling with leverage, gambling in debt, basically, which is really high speculation. So what I want you to do is, I recommend you have a scoring system. And what I'm going to do is give you a few questions now that you can ask yourself to see what your investment is, so you can position it in that scale, and you can give them points so that you can add up what it totals and then where it sits in the long-term solid investment over a speculation. And we'll start there, and then maybe next week or the week after or later down the line, we'll start talking about other questions you can ask to make better financial decisions in each of these assets. Sound good? So, I'll keep sipping my coffee. I apologize for the gulping, but my throat is not going to last otherwise. The first question, you might want to grab a pen and paper for this, or take some notes. And if you're taking notes, once you've taken the notes, shoot a photo of you listening to the show with the notes, tag me on social, and I'll share it on all my platforms, and you'll be in the chance to win competition time next week. So, first question. Whatever you're investing in, whatever the asset is, whatever the instrument is, does it generate a positive cash flow? That's the first question. So whatever you're investing in, I drink like a fish. Whatever you're investing in, does it produce a positive cash flow? Okay, and you want to ask yourself, is it positive? Is it like break even? Is it neutral? Or is it negative? And you want to score it. Obviously, if it's positive, you give it a higher score. If it's neutral, you give it a medium score. And if it's negative, you give it a minus score or a low score. Okay. The next question is, when you're going to invest in this asset, what type of leverage will you use? What type of leverage will you need or use? What type of leverage are you looking to use to invest in it? Is it 2 to 1? Is it 5 to 1? Is it 10 to 1? Is it 50 to 1? Is it 200 to 1? And depending on where you sit, obviously the 200 to 1 is going to be the highest leverage, which is going to be the highest risk, which is going to give you the most speculative score. And then if it's 2 to 1, that's going to be the lowest score, and that's going to be erring towards the investment side. Question 3 is, what is the average return? What's the average annual performance or annual return over the last 20 to 30 years? Is it positive? Is it neutral, or is it negative? And the reason I like to use averages over 20 to 30 years is because it gives you that good sample size. It gives you a long-term mean performance of the market. And that's really what you want to be thinking of in terms of investing. You want a big sample size. So question 3 is, what is the average annual performance of whatever it is you're investing in over the last 20 to 30 years? All right. Question 4 will be, how important is it for you personally? Okay. And you have to think about this when you're thinking about making the investment. How important is it for you that the price moves up or down? So how important is it for you, or crucial for you, that the price moves in a certain direction? Okay, so up if you're buying, or if you're shorting, how important is it that it moves down? Is it absolutely critical? Is it like, really, really important that it moves? Is it, you're not fussed really? Is it not important at all? Like, you're not bothered at all what it does? How important is it? And obviously, depending on how important it is to you, the level of importance, the high importance, is going to be the higher speculation. Is this starting to make sense? And the lower importance is going to be a longer term investment. Okay. Question 5 is, what is your primary reason for investing in the particular thing in the first place? So someone messaged me today, they didn't even know what it was. They were asking me if it was a good investment. Okay. The worst investment you can make is a tip from someone else, or some Dave down the pub telling you it's a good investment. That is the worst investment you can possibly make. So the question is, what is the primary reason for you investing in a particular thing in the first place? Is it strategic? Okay, so high scores for strategic, for a plan. You've read the financial statements. You know that it's undervalued. You're buying in at a price that you've been watching for some time. You're using some technical skills, maybe, whatever. Is it a hunch or an educated guess? So you might just have an educated guess. Is it a hot stock tip or a hot crypto tip from someone that you just met that you don't know? And obviously those have got levels of speculation to investment as well. So that's question 5. And then question 6, which is the last one, is how long do you plan on holding the investment? Okay, how long do you plan on putting your money into that market and leaving it there? Is it less than a year? Do you need your money back in less than a year? Is it less than 5 years? Is it less than 10 years? Is it more than 10 years? Is it forever? And of course, if it's forever, it's going to have the investment score, solid investment, right down to less than a year, which is going to be speculation. If you need it in less than a week or 2 weeks, I've had people asked to give me their money to trade because they need to pay for a bachelor party that they've promised their brother in 2 weeks' time. That's absolutely crazy. But that's pure speculation, pure gambling. They don't know what they're doing. They're ready to hand over their money, hoping that I'm going to provide them with a return that's not only going to be a good return, but it's going to pay for the bachelor party that they've already booked. So they're already in debt. They've already paid a deposit. That's crazy. So there's going to be scale of speculation to investment there as well. And you want to have a scoring system. And you want to have like the high speculations have the highest scores, so that the lowest speculation, the more investing answers need to have like, say, 1 point, and then give 10 points to the next one, 20 points to the next one. And then what you want to do is add those up and work out the total percentage of each investment. And then if it's over 50%, 60, 70, 80, 90, 100, it might be really high speculation, and you'll have that scale there. If it's 40, 30, 20, 10, 0, that's going to be high, more on the investing side, more on the solid long-term investing side. And then it's up to you to kind of watch that gauge and measure how many of each of those you've got in your entire portfolio, so that you've got a scale and you're aware of the risk on your total capital. So before you even start thinking about what are the questions you need to ask yourself in like a particular investment, you first of all have to ask these questions in, is it investment or is it a speculation? Not many people think of property as a speculation, but it is. Not many people think as one individual stock as a speculation, but it is. But by having this system and this scoring system, you can start to work out, well, how much of a speculation is it? How much of an investment is it? And then you can weigh up where you're weighted. If you've got too many of one or too many of the other. And what I recommend is you always keep it around 70 to 80% investments, okay? And then 20 to 30% max on your speculations. I would even say less than that, particularly if you're newer. I've had stages where I've been 60% speculation, but that's when I'm professionally trading full time, and then it's gone 60, 70, 60%, then down to 70% investments as well. So you want to make sure that you've got a handle on it all. You want to know what you're investing in, how over risk you are, how over leveraged you are, what makes up your entire portfolio. And remember, if you're heavily just speculating, you're going to have a bit of more of a stressful life. And if you've got some investments and they outweigh your speculations, you're going to balance that out. So it's really down to you, but it's a great way of figuring out what you've got where and how much of it you've got. So that's really basic. We've obviously got in-depth tools in TOF that help you work out all this stuff in more detail. And we teach you how to do detailed analysis on one particular asset. And then we teach you how to, and give you the tools to allocate all of your distribution across all of your portfolio and account in your investment account, so that it's not jeopardizing your total liquidity and you're not over risk. So you can check that out in TOF if you're a TOF member. If you're not, we're doing a special intake. It closes on the 7th of November. You just need to reach out to us by going to bit.ly/TOFbuddy, book a call, get in the group, get in a session, and we'll show you what it's all about. And just on the last thing here, I just want to say, remember the number one rule of investing. Okay, the number one rule of investing is don't lose money. Okay, the number two rule of investing is don't forget rule number one. And if you do that and you go in with that mindset, you should do all right. All right, so that's it. That just brings us on to competition time. Competition time. So to win competition time, all you have to do is be here every week. Take a little snapshot, post it on social media, tag me in it, engage in the chat. Let me know what you're getting from the show, from the podcast as well, and you'll be in with a chance to win next week, where we give away some goodies. This week's winner is someone who has just been an avid listener and fan of the show and the podcast, and that is Becky Gray. Well done. Thank you, Becky Gray, for being you. Reach out to admin@graystone.education and we'll be sending you some goodies in the post. And that is it. Until next week, I just want to say thanks for coming, and have a great rest of your day and weekend, and I'll see you then.